welcome, welcome. Without further ado, Godric here, your stock market mentor. Thank you guys for coming. Monday night, gonna look at some stock market stocks tonight. I come on every Monday night. You guys want to give me a follow to talk stocks, to look at some trades, maybe to look at some positions, maybe look at some strategies. What I do, I specialize in earning income monthly from stocks, from trading, to pay all my bills and retire in the stock market. That's what I can show you tonight. Welcome, Hermes. Thank you, Hermes. Thank you for the likes. Hermes is the man. Thank you, sir. Braden, welcome. Genco, welcome. Thank you, Hermes. Who should I invest in? Braden. Who should I invest in? I have 12 stocks for you tonight I want to talk about. They're not great stocks, but they'll probably keep you out of trouble, and some will get you a nice return, for example, on the cover call or on dividends. So I want to show you that. Stay tuned. The first one is this Donald Trump stock, this DJT. Regardless if you like Trump or not, the stock is going crazy. Today, DJT, 47.36, up 8. Let's do the math. Well, I mean, it's 20% if it's plus 8. 10% would be plus 470, right? So it's like almost 20% in one day. And if you think about it, if you get a 20% move in one day on a stock, I mean, those shares, I mean, that's a great return, you know, and like, it's heating up right now because of the election, so some people think it's going to win, and the stock might jump to maybe, you know, I don't know, 80 or something crazy. So it doesn't matter whether he wins or not. It matters that the stock is hot and it's going up. So don't short right now. Go long. Go with the trend. We have, what, a week left? You see this little angle going up? This is massive buying. Like, let me show you. 105 million volume today in DJT. Market cap is 9.47 billion. Under 10 billion market cap. So technically, it's not a big company still. It's very small. It can still grow. DJT does like the platform for Truth Social and other conservative media. Let me pull up. I'll read it to you. But again, like, here's like a situation where you can do a trade. You know, you can do a cover call. You can do it. I'm going to show you actually the Strangle position today on DJT. It's just a 1 month trade. It'll probably make good money. You know, you can pick up a few shares if you want. What'll probably happen with this stock, like other stocks, before the news, this is like another kind of trade. They tend to heat up before this announcement, before the earnings announcement. In this case, before the announcement that if he wins or wins presidency. And what happens is after the announcement, it cools off, okay? It just does that because the magic is gone, you know, that the result is in, and there's nothing unknown. So it cools off trading. So it's going to peak up now, and then after the election probably will at some point cool down. So right now, it's going up, and you can buy a few shares, or you can buy a call option. By the way, the guy who asked me what should you invest in, don't invest in this as your first investment. It's very, volatile. But it's going up, and like if you are going to look for a return, you would want to look at something like this. Now, it's not a great investment because the stock is a new issue. It doesn't have the history behind it. We don't know how well, if they're going to make profit. They're operating at a loss. All these new companies come in at a loss. There's no profit yet. Kind of like Meta took a while. Facebook took a while to show a profit, right? So now Truth Social and DJT stock was going to operate basically on hype. It's all hype. I'm not gonna lie to you. So don't buy this as your first stock. Like, I would have you buy one of these other stocks. I'm gonna show you. What? That has a profit. That has a good 10-year chart. It's been going for 10 years. That has volume. That has what? What PE is a profit. That has a positive PE. It's showing profit. That has a CC, which is a cover call. This one does have a cover call. Let me read it to you. You guys need a stock market account. Some of you guys don't have a stock market account. Open with Schwab. They have a great online service, 24-hour access to your broker and your stocks. A real person, not a email system like Robinhood. A real broker that answer the phone, talk to. We're gonna need a calculator tonight. Bring up your calculator. Do the math with me. And Robinhood doesn't have that. You know, other companies don't have that. So that's why I think Schwab is the best. They charge like 75 cents for an option contract, and the stock shares are free. So it's basically free trading. Okay. Go to research, U.S. markets. Always U.S. There's no reason to diversify. The U.S. is the GOAT right now. DJT. Donald Trump Media, read to you. Trump Media and Technology Group Corp develops a social media platform known as Truth Social that offers social networking services in the United States. The company was founded in 2021 and is based in Sarasota, Florida. So basically, they don't even tell you a lot. It's like brand new. It's 3 years old, which is brand new. You know. We know most businesses fail, you know, and some of these stock businesses, you know, they do eventually fail, some of them. So unless this one takes off, someone gets behind it, a lot of people get behind it. Doesn't mean it's going to be the next Facebook. I wouldn't say that. But right now it's hot, a lot of volume. Look at the chart. Look at the 6-month chart. Look at the current charts. They're going up, volume's up. And when the stock's going up, all it really means is there's more buyers than sellers. It's hype. It's right before this election. It's like it's like an earnings release. They're waiting for earnings release, you know, but it's even more than that because it's like a 4-year election, you know. If he doesn't win, it'll probably get slammed, you know, but we won't know that until probably two weeks after the election. And that's why I'm going to show you a trade that gives you 1 month after. We're going to go, December. The election is November 5th. We won't know probably until December 5th. So I just put 1 month out on options. I will take some questions. I only roll back so far. So if I miss your question, just put it in again. Take a look right now. How you guys doing? Appreciate you. Give me some. Thank you for the likes, bro. Appreciate the likes. You guys, there's 27 people in here. Give me some more likes. Give me tap. Hit the screen. If you're inclined to gift, throw me a crane or two. I won't say no. I'm taking subs. It's only $5 a month. I can go in your DMs, answer questions. I can also bring you up on the live and ask questions, go through your trades. I can advise on trades. Teach you my system, how to retire into the stock market. All right. Where are we at? Thank you guys for coming. I like to come in at least once a week, Monday night, and sometimes I'll come in on a random day. You guys, the earnings, though, is this. Half of a message. Thank you, Hermes, for the likes. Appreciate you. Guys, catch up with Hermes. Hit those likes for me. Let's get some people in here. Something about an algorithm needs to be crumpled up. Netwick. Dude, you gotta help me with your name. Netwick Ahotis. Yeah, it's probably gonna dump. Right now it's going up. But, you know, the hype will end at some point. It's like a burning match. It's on fire, then it goes out. It's risky. Don't make this your first stock. Don't do it. I'm telling you. What do they say? expert investors only, risk capital only. No novices. Don't want any novices in this one. Guys are gonna get slam dunked. All right, a lot of volume on from Russia, Saudi Arabia. Elon Trump owns 50% share. Thank you, Circuitry. Appreciate you. Everyone follows Circuitry. Circuitry knows about stocks. Yeah, Elon is kind of helping Trump. It kind of gives him like a strange appeal, I think. Earnings. All right, what else we got? I'm looking for a couple more questions. I'm keep going. Right now, it's going up. If you look at the 6 month, the high is 53. So it's gonna hit the high. I'm gonna just make a forecast. It'll hit the high at 53, probably next week, and then probably they'll break out and go higher. Just gonna say that. And at this point, it's gonna be choppy. It's gonna be a lot of selling, a lot of people taking profits. And you know what? You buy a few shares, you probably make a few bucks, and then when you get a profit, just close. Pull the trigger, walk away. That's my best advice. A lot of times what people will do, they'll buy shares and they're just like, don't sell. And they go in profit mode, they don't sell. And, who knows where it'll be. Eventually it will cool off. You've been warned. All right. Are you swing trading? CRT Central, are you swing trading? I do a little bit of swing trading. It's not classic standard swing trading. Swing trading is technically trading like volume on short spans, 1 day, 1 week, 1 month, trading peaks and valleys. I call it mild monthly trading. Okay, and what I'm doing on some of my positions, I will buy a dip and sell a peak, and that's on specific stocks. I'll tell you about that. It's like on a monthly trade, I'm looking to get like 2.5% to 5% return on shares, on share price, and that means an option is going to have more leverage. It might be like 25% on an option, 50% on an option. The stock goes up 5%, for example, or 10%. That's going to be, maybe 50% return on an option, 100% return on an option. If you guys were with me, was it Friday? I was here. Talked about a call option trade where we made 500% return, 450% return on an option. That was the Tesla earnings. If you missed it, I have it recorded on my YouTube, the whole thing. Also, I have some recordings on TikTok too. Check my profile. If it's an hour video, those are the recordings. Just like crypto, it produces nothing. It's just a community bank account. Scooby, thank you, sir. Some people chart up stocks to scams, because, people are just putting the money in there, price can go up or down, and it starts being more legitimate trade if you're investing in something real like Pepsi Company, PEP stock. The person who asked what you invest in, long term, look at a stock like PEP, Pepsi, because what? They produce a real product, they have real employees, they go to 150 countries, they provide a good service, and people look at those numbers, that business, and investors buy shares. Shares go up over time. Let me move on to. Before I move on to Pepsi, let me show you some. Let me show you the trade I want to show you. Okay, here's some companies that I watch. I follow about 60 companies. Apple, everything was up today pretty nicely. You guys want to take some pictures? Show you some of these companies I follow. I really have a core 10, which means I follow 10 stocks, but I also look at other stocks because I want to see how the market's moving. We'll take some pictures. I'm gonna have a few more left. 1, 2, and 3. There's yum donuts right there. All right, here's Donald J. Trump. Okay, this one. Let's see. All right. Okay, so this is the option change for next month, December 5th, I believe. Let me pull it up here. Options. I just want to show you something. You could do this trade if you want to, if you know how to do it. I went to December 6th, 38 days. Because why? Because that's going to be 1 month after the election. They'll probably going to know the results by then. And that's, I know that sounds crazy, but, or before, right? Okay, so the idea is to, we're going to sell a call and or sell a put. Here we're looking at buy 100 shares of the stock. 40 minutes, that's $5,000. Okay, watch this. If we, let's say we spend $49.50, let's say 50 price, right? We can sell a covered call at 55. That gives us 5 points to make more money. 5 more points. And the 55 is paying $12.50. See that? I circled it. $12.50. That's a premium. Okay, so what you're agreeing to once you buy the shares, you're gonna sell one call for December 6th date, and then the strike is 50. That gives you 5 more points to make in share growth. And we can pay $12.50 for that. So let's do the math. That's $12.50 per share, or $1,250 income on a $5,000 stock. Let's do the math. 12.5 premium divided by 49.5 investment, 25.25% return. Now, I've been doing this for 30 years. That's 3 decades. I've never seen a stock provide 25% return on a covered call in 1 month. I've just never seen that. What does that mean? The covered call pays 25.25. That means that you can buy the shares here, spend $5,000, and write the covered call for 1 month. Immediately get 1/4 of your investment back. It's like a 25% return in just by pressing that button. Okay. Now, it will matter where the share price is because your investment is the share price. If the shares go down, then you start losing share value. Shares go up, you can only make up to 55 because you give away the upside. You give away the upside past 55. So 1 to 100, for example, you don't get all that money. You just get the 25% return, which is $12.50, plus it goes up past 55. You'll get the distance between 50 and 55, which is 5 more points, which is $500 more. So, sorry, $500 more. So if you did this, $17.50 divided by $49.50, maximum gain you're going to make is 35% return, or $1,700 if the stock goes up past 55. Better return, but we're not sure if it's going to go up past 55 or it may come down a little bit. But let's look at the break even. Here's what I want to say. If you do believe in this stock, if you do want to hold the shares through the election, let me show you the break even. If you're getting $12.50, all right, and your cost is $49.50, then we're going to subtract those two. $49.50 minus $12.50 equals 37 points. So above 37 share price, you're in profit mode. At 37 share price, it's a break even. And below 37 share price, you start losing money because you have the share growth loss, plus you cap that off with the premium, $12.50, then you start losing. Now, that might seem like a so-so okay, maybe not trade. So let's sweeten this trade. Can I sweeten this trade? Watch this. back to DJT. You know how we sold the call? We can also sell the put. All right, now, this is called a straddle. If you sell the call and the put, and here's the deal. You can only get assigned on one side. So it doesn't cost you twice as much as you would think. It just costs you one time, okay? In this case, we're gonna own the shares, so we already have that investment. And you can sell the put for basically no extra money, okay? And you're gonna get more money. The difference is you can get assigned if it goes down, which means you're gonna have to pick up another 100 shares, okay? So let's do the math on that. I have the trade here for you. I sold at 39. I just think that's a good put to sell. So the stock's here at 49, okay? You can sell at 39, okay? And there's a little difference there. If the stock stays above 39 strike price share value, nothing happens. You're gonna come away with circled at 1065, right? And you have to agree to buy those shares at 39 or lower. This is the naked put trade, okay? So let's do the math, shall we? 1050, which is $1,050, and 400 shares, which is one contract. Have to have 100 shares minimum to do a covered call or a naked put. Actually, I said that wrong. Have to have 100 shares. Let me say it a different way. One contract signifies 100 shares. That's all I wanted to say. We're not doing shares right now. 1050 divided by. Now, since you're taking it at 39, the cost will be 39, which is $3,900. 3,900 equals a little bit more. 26.9% return on the naked put. NP. I got 26.9% return on the naked put, 25.25% on the covered call. Now, those trades can run separately. On the one hand, you have 100 shares. You're hoping the stock kind of maintains somewhat. Ideally goes up above 50 or maybe higher, but at least at 37, you're at a wash. You're above 37, you're in the green. Maximum gain 1,700, 1,750. Ideal gain around 1,200, 1,250. On the naked put, you're putting in $4,000, 3,900 to take the shares at 39. Only if it drops. If it doesn't drop, you're going to walk away with $1,000. Your investment is 3,900, 26%, 27% return. Okay, 1 month trade. All right, 38 days trade. And let me explain the straddle. Okay, actually, what it's called is called a strangle. You're going to just sell the call and sell the put, and you're going to add these premiums together. Since they only can assign one side, they only ask you to hold half the investment or the investment to do one of the either sides. So it's like getting double premium. It's like a double premium when you sell both sides. So if you did sell the call for the 55 and sell the put for the 39 without shares, we can add these premiums together. Let's see what we get. Okay, 1250 for the call, for the 50 call for 1 month out, plus 1050, 60, 1065 for the 39 put to sell that one. We get 23.15 points of premium. Okay, which is like half. It's like 50% return, which is crazy, and it's never happens. It's almost never happens. For 1 month, we're looking at a 50% return. Okay. Again, either the call can get assigned or the put, but not both. So they're only going to have you put the money to do one of the two trades, but you can do both. So it ends up being a 23% return, or if you do the math, what was it? It was 1250 plus 1065. Oh wait, 23.15. That's the premium. Sorry, let's do the math. I gotta finish the math. 23.15 is the premium divided by the cost. Let's just say 5,000 or 49.50, which is the shares. 46.7% return. So almost 50% return. 46.7. Now, a couple things can go against you on this trade. One, if it goes all the way down. Well, let's just do this. If it's 23 points, you're getting premium, right? And the share price is 49.50. Let's do the break even, okay? Break even will be 49.5 minus all this premium, 23.15. Instead of the break even being 37, now your break even is 26. How about that? 26 break even, okay? If it goes down. Now, if it goes up, we're going to get a sign on the call. And here's where it gets tricky. I'm going to explain to you, okay? If it goes up, we're going to be short, because we're going to be short the call, and there's a sign on the call. So this is what we have to do. 23.15, which is the premium. And above 55, we start losing. So when we go at plus 55. So we're good until 78 price on the shares going up. And after that, we start losing on the whole. At 78, it's a wash. It's a $1,200. It's a $2,300 gain. Anywhere between the stock going from 39 to 55. Write that down. Between 39 and 55, it's maximum gain, $2,315. When it starts going past 55 on the call, start losing because we're going to sign on the call, we're short the call. But since we got 23 points, the break even is going to be 78. So above 78, we're going to be losing on the whole. And so what you do, you spend a few bucks and you buy the call above 78 to protect you. And that'll even out your trade. And let me pull it up for you. I don't have a picture of that. So the highest call you can buy is the 65. And for it's 1090. Okay. So plus 165 call for 1090. Let's just say $1,100. Okay. So we're going to have $1,100 cost against our $2,315 gain. Let's do the math. 23.15 minus 1,100, 1090 actually, but I'm going to put 1,100. We still get $1,215. And we're capped off if it goes past 78 because we have the call at 65. So we're looking to make $1,215 on this trade. It's a straddle. You buy both the call and the put. You buy the 39. You're selling the 39 call. You buy the 55 put for next month for December 6th, and we get premium on both sides. And we're also going to buy the call, which is a 65, which is going to protect us. It's expensive, but we're going to have this. We're going to have a $1,200 gain with protection, and we're still going to have upside play. That's why it's better to do that. Hope that wasn't too much. You can rewrap that video if you want to get that again. But 20 shares at 30 as well. I have 2 calls for 55 January 2025. Artie, the one-man party. I like the name. Awesome name. Artie I have 2 calls for 55 January 2025. Artie, good luck. What I would do, if that shows a profit, get ready to pull that trigger. Because why? Because if you wait too long, man, you know, it can cool off, dude. It can cool off. That whole profit you have can just deteriorate. This is not Pepsi. This is not Starbucks. This is not a faint of heart trade. This is a high risk, high volatility trade. So think about your exit strategy. I don't want you to have a nice gain and then it just go poof. You heard it here. A lot of people in this stock, 100 million shares today. But anyways, that trade is like, it's almost like a win-win the way I set it up. And the premiums are so high again that it's almost like you can't lose. But you can always lose in stocks. I'm never going to tell you it's a guarantee. I'm never going to tell you it's foolproof. It's always a way to lose. In this case, if it goes below, what is it? We get 12 points. If it goes below 39 minus 12, 39 minus 12, we're at a loss below 27 still. So the stock has to at least be about 27. But it can go higher. It can go 50. It can go 75. All right, enough of that. But if you want to just, what should you be buying? I'm going to give you these stocks. You guys write them down. There's 12 stocks here, which I think are great. They keep you out of trouble. And I'll tell you why they're good. But I kind of been looking at these stocks, looking at stocks going up. Mostly they're all long, actually. Some of them can just maintain and get a dividend, but they're all long. Here they go. DJT is one because it's so hot for the election. McDonald's, MCD. McDonald's had like a 15-point loss the other day when they had the E. coli breakout. It went down from 315 to like 280, and now it's back up to 296. It's back up. McDonald's 296.79, up 418 today. Like people forgot about the E. coli. It's weird. 5.6 million shares volume. It has a dividend of 2.42% yield. McDonald's has a market cap of 214 billion. Has a PE. What's McDonald's PE? Let me pull it up for you. It's going to tell you. MCD. If you don't mind McDonald's, it's a good long term. Has a dividend. As a dividend stock, it's a good long term. And it's a share growth stock. It makes money over time. Like in 5 years, for example, McDonald's went from 193 to 297. So it's just steady, kind of not a great return, but a steady return. Look at all these dividends, look at all these earnings reports. Steady. 2.42% yield. And the PE is, so the PE, 25.51. 25.61. Write it down. 25.61. Which is kind of high. I mean, a lot of times P is around 15. But this market is so exuberant. All these S&P 500 stocks are just doing like bonkers. So like these 15 PEs are now at 25, I like McDonald's because it has the robust share price, about 300. Check. Has a 10-year chart. Check. That's 2. Has a volume, 5.6 million. Check. Has a dividend yield. Check. That's 4. Has a PE. Check. That's 5. And it has, it does not have a cover call. So it has 4 out of 5. 4 out of 5. I'm not going to be able to go through all the details with you and all the rest, but I'm just going to give you stocks. We can go over details later. TSM, Taiwan Semiconductor, 194, down 8 today. 20 million volume. TSM. So we got DJT, MCD, TSM. Okay. Next one, Tesla, 262.51, down 6.68 today. That's Tesla. Next is Starbucks, SBUX, 98.02 plus 71 cents. Starbucks has a nice dividend. Let me pull it up for you. Well, I have it here. 2.51% yield. 111 market cap. 111 billion market cap. 6.7 million shares traded today. And I like Starbucks because it just kind of bounces back nicely. It was around 100 months ago, 4 or 5 months ago. Got slammed on earnings or some bad news. Not really bad news, just, investor sentiment. Went down to about 75. Now it's back. It's back to 98. So what? On good companies, you can buy the dip. Just write that down somewhere. Like write it down on your wall. Like on good companies, buy the dip. When it dips like that, 10 points, 20 points, 20%, 30%, almost always like 9 out of 10 times, like that's gonna come right back. It's a trade. It's the stuff people do. They buy dips, and if it swings up and you're trading, you can sell the P. Just look at Starbucks. Like, just pull up the chart. It's crazy. It's like magic. It just pops right back up. SBUX. Starbucks has also had a lot of stock splits. It's a great stock for other reasons, but let me see. It dumped in May, and it came back in August. It took June, July, August, just over 3 months. It took 4 months to come back. In May, it dumped from about 90 to 72. Then it came back in end of August. You know why it came back? Because Chipotle, it got Chipotle's CEO. The Chipotle CEO went from Chipotle to Starbucks. It's just crazy stuff like that. It's going to move the stock. I don't know. I'm halfway through this. Let me just run through this and I'll take the questions, okay? ROKU, ROKU, you can go. 7605. ROKU has a great covered call. It doesn't have all the check marks, but if you want to get a good covered call return and possibly some share growth, because it looks like ROKU will go back up to 100. You can try it out. Roblox, ROKU is ROKU, okay? Roblox, RRBLX, 42.30, down 116 today. 3.77 billion volume. That also has a cover call. Look at that one. Roblox is more risky. It's a newer issue. We don't have that history to look at, but you know that's that game the kids play. Roblox is pretty popular right now. Again, hot. Again, it's hype. It's in the news. Next, PM Philip Morris. This is a good dividend stock for long term. Also some share growth. PM, the World Tobacco Company, 130 and 50 cents. 130.50 plus 64 cents today. It's a 5.2 million volume. It has a great dividend, 4.16% yield. So that's the highest dividend I'm going to talk about today, 4.16. And you know, it might seem that's not a lot of money for a year, 4% per year, but like get together $1 million, yeah, 4% dividend stocks. That's 40 grand a year. That's just it's like free money. You know, like I always say, like fall out of your bet and get the dividend. You don't gotta do nothing. You don't gotta trade. You don't gotta like look at market trends. You know, just own the shares, get the dividend. And that's gonna subsidize somebody's retirement, like somebody's pension or Social Security. That'll supplement, you know, like retirees, whatever money they have, and they can live off that. That's why it's important. And dividends are better than these long-term share companies like Meta, like Microsoft, like Google and Amazon, because you get paid money in dividend. You can live on that money. Whereas these other companies that are, even if they're going up like bonkers, you know, Microsoft, you know, if they don't have a nice dividend, you have to actually sell shares to get that money out. Think about that. Like, even if your stocks are doing 10% return, you can't, they give you no money. They give you no income unless you sell the shares. And eventually, if you sell your shares, you have no shares eventually at some point. So the dividend stocks are good because the shares stay intact. You're getting paid dividend on top of the shares. You don't got to sell shares. You don't got to trade. Just own the shares, get the dividend. That's why I like PM. Been in it for a long time. It was MO, which is Altria now, and it's split. MO is the U.S. Adjacent, and then PM is the World Tobacco Company. Okay, and their PE is 20.6 0.62, more reasonable PE than the others. Next one is Pepsi, PEP. I mentioned it. 169.84, down 195. So the guy who wanted to, what should I invest in? I want you to be safe, okay? Godric here, your stock market mentor. I'm not going to throw you in a crazy trade where you lose money. Don't do call options. Buy a couple of shares of Pepsi or Philip Morris. That's what you should do. Because why? Because those shares are going to be here in 5 years and 10 years. Probably a lot higher. You get some dividend, you'll see the value. Save some money to put earnest deposits in your investment every month. Over your account of Schwab, you don't have that. I wouldn't do Robinhood. A lot of problems with Robinhood. But what you're doing, you're building your investment over time. And I'm trying to keep you out of trouble by keeping you out of other stocks that are very risky and go to stocks like PM and PEP, which will give you a dividend and it's probably going to maintain the share price. They have a great 10-year chart. The next 10 years is going to be probably like the last 10 years. That's just how it works. Trends. They have each company has 100,000 employees. They're doing something. Like some of you guys invest in these companies, no-name companies. They have no market cap. They have no volume. They have no employees. They have no product. They have an idea. It's crazy. Okay, just 3 more, guys. Write this down. NVDA. 140.52 minus 102 today. Down $1 today. NVIDIA is great. NVIDIA is great for a lot of reasons, but they have a big AI department, artificial intelligence, and they're doing those chips. They have a great cover call, 4.5% return, just under Tesla's. 140 share, probably go higher. Probably going to be 200 by next year, I'd say. You heard it here first. Next one, Chipotle. CMG. Now, Chipotle doesn't have a great cover call. It only pays about 2.5%. But Chipotle has opened up 500 more stores. And it's $60 today. $60 a share. Plus 116 today. So these shares can go maybe to 100 within a year or two. So you're going to have more of a chance of growth in this company than these other companies, Pepsi, Philip Morris, because these other companies are more established, they're more safe. This is more of a higher risk, but also higher return. Chipotle, check it out. CMG. Chris, Mary, Gregory. All right, last one, Palantir. Palantir, like I said, it's not a great stock, but it's a decent stock. PLTR. Lower priced, $44.97. Just under $45. It's up 11 cents today, plus 11 cents. Market cap, 34.93. No, I'm sorry. Volume, 34.93 million. Great volume. Market cap is 96 billion, so just under 100 billion market cap. PE is really, really high, 264, which is not great, but they do government contracts, so we think that PE will be coming down. And guess what? Things are heating up in the Middle East. Our adversaries are in the Middle East. And these guys do counterterrorism. So guess what? This stock's probably going to be going up. Just saying. You heard it here first. Palantir, PLTR. That's my top 12 for you guys today. I'm going to jump on your questions. Appreciate you. Was that too much? All right. Questions. Buying call options, I think. Puts. As a foundation, you need to have shares. These call options, guys, some of these call options are going to get wiped out. If the stock goes against you. Let me tell you something. I'm trying to tell you what I know from experience. You guys that are making money right now in the stocks are not that intelligent. I mean that in a good way. You're not lucky. The whole market's going up, bro. So don't think that you're like the Wolf of Wall Street. You guys make $1,000 a day. I get all these DMs. Oh, look, I made this money. Dude, the whole market's going up. So you're not that smart. It's just that it's you're riding this wave. I'd be impressed. You can make money when the market comes down, when you have a bear market. That's going to impress the hell out of me. Then you're going to appreciate these dividends. Then you're going to appreciate 4% return on dividends. You're going to appreciate these covered calls, 5% a month on these covered calls. Because your share prices may be coming down over 3 months, over 6 months, over 9 months. And that's going to get people, that's when you get people get knocked out of the market. That's when you separate the men from the boys. So be ready, okay? Appreciate you guys. Thank you for the likes. You guys, a few people in here. Give me 2 shares each. Give me 2 shares each. Just hit the share right bottom. Share 2 people, get some more people in here. Appreciate you. All right, questions. The market moves in cycles. User 2108. Yes, it does. The market moves. I got to follow everyone who follows me. I'll follow you back at the end of the live. Appreciate you. Yes, and this is what keeps a lot of people out of the market. We'll have uptrends where things are going up and people making money. And we'll have downtrends, when people are losing money because their share price is going down. And it happens the same way in business, real estate. There's real estate bubbles, and the real estate value comes down. People usually don't get crazy about it, up and down. But when there's a share prices, people tend to be more like, oh, I'm making money, I'm losing money, I'm making money, Same idea. It's just a little bit more, I think a little more stressful, a little bit more real than real estate. Okay. Kenneth, welcome. Appreciate you. I got your sub. You guys, you want a sub? It's only $5 a month. I can run these trades through with you in your DMs. You ask me questions. I'll answer all my questions from my subs first. You want to come over here, Kevin, Kenneth, request, I'll bring you up here. Want to ask some questions? Want to say hi? Implied volatility is crazy on DJT. Yes. And Drek, thank you for the point. Implied volatility is crazy on DJT, and that's why you're going to get 12 points for selling a call in 1 month, 12 points, 10 points for selling a put in 1 month, 25 or 50 or 47% return on the straddle. Think or Swim is goated. Yes, Think or Swim is the bomb. Whoever was on Think or Swim, that's turned into Schwab now. I still have the Think or Swim app. It's a great app. I use that for most of my trading. It's under Schwab now, though. You guys just talking now. We're another fine viewers. 20 shares. Okay. Rig. David B. Rig. You're asking me about Rig stock? Let me pull it up. That stock. RAG. Transocean. Why does this look familiar? This stock that was like a really high price before. Well, it's only 403, so that's a red flag right there. RAG, Transocean. It's like a penny stock, basically. That would generally be a no. I don't do penny stocks. It was as low as 87 cents back in 2021. That's right around the COVID. Transocean Limited, together with its subsidiaries, provides offshore contract drilling services for oil and gas wells worldwide. It contracts mobile offshore drilling rigs, related equipment, and work crews to drill oil and gas wells. Company operates a fleet of mobile offshore drilling units. A fleet consisting of ultra-deepwater floaters and harsh environment floaters. It serves integrated energy companies, government-owned and government-controlled energy companies, and other independent energy companies. I want to see if their competitors, if they have competitors. Let me see. Transocean is Rig. Mind stock, Mind Technology is a competitor. It's bigger than them. Archon Technology is also bigger than them. Guff Island Fabrication is also 90. Oh, that's smaller. Oh, wait, hang on a second. Scratch that. I lied. All these companies are smaller. They're million market cap, and Transocean is 4 billion market cap. So maybe Transocean is the main game in their field, 4 billion market cap, but they're still small, and the stock is only $4. So you're probably hoping that stock will pop, 18 million volume. You know what? I'll tell you what. Hang on. Let's look at the cover call on this RIG. Maybe it's worth a cover call. Click on options. In what, 1 month, right? RIG. Let's look it up, guys. It's the 28th, so we're gonna go December. We're gonna go November 29th. 31 days. So buy the shares here. 100 shares at 403. So we spent $400. I'm gonna write the cover call. Let's say we write 450. Ooh, only 11 cents. It doesn't pay enough. Write to $4. If you write the call at the money, $4 is 29 cents. 11 cents to sell the 450. Let me see. Hang on. I don't think it's enough. 11 divided by 4.03, 2.7%, and then 29 divided by 4.03, 7%. Okay, so here's what I would do. Okay, you gotta buy 200 shares, or average in bulk in twos. You buy 200 shares, it's gonna cost you $800, $806, right? You're gonna write one cover call for the $4, which is like even money. One cover call for the 450. You're gonna get 29 cents for the $4, 11 cents for the 450. That's 40 cents, but then you're gonna lose 3 cents on the share growth because it's 403. So 29 plus 11 is 40. 37-cent return. 37 cents divided by 2. 0.37 divided by 2. Okay, 18.5 cents average. So let's do the math. 0.185. 18.5 cents per share, which is basically $18. It's going to give you $18 for 100 shares, divided by the share price of 4.03. 4.5% return. So you're going to get 4.5% return on the monthly and be 45% return a year. I have great stocks that do that, you know. And this is like more like a penny stock, so I kind of wouldn't do it. But I did want to show you the cover call, what it's worth. Thanks for asking. All right, more questions. Kenneth, I appreciate you. If you want to come up, just request up. I'll let you up. You're subbing. Does it have news? Which one? Does which one have news? You got to give me a stock. Dude, if you put a question in the comments, put the stock symbol also, please. Can you explain what's happening with PayPal? Why is it shooting aftermarket? PayPal. Let's look it up. I don't have the news dates here. You have to ask your broker for that, or you can look up the PYPL. PayPal was great, like when Elon Musk sold it. You know, now it's just kind of it's doing what it's doing. $85.95 PayPal, up 236 today. Actually, scratch that. It was $83.50 during the day, plus 189, and then after hours it went up more to $85.95, 236. They probably had earnings. That's why it's up in after hours. But let's look at the 5-year chart. Let's see how they're doing. PayPal, PYPL. Yeah, that's what I thought. 5 years ago, it was $103. Okay, before the COVID or during the COVID, they went up to $275, and then all the way down to $50, and now it's creeping back up to $85. This one actually looks a lot. Guys, write down PayPal. This one actually looks a lot like Roku. They were doing great at one time before the COVID. COVID came in, and well, in this case, PayPal did better. But then what happened? They sold off, and I'm going to assume they have no PE. Let's see, no PE, right? PE. Ooh, 1979. So now they have profitability. So maybe this stock will be going back up, maybe past 100. PayPal. Competitors. I have some competitors here. I think I have a cover call. Volume, 15.2 million. Great volume. PayPal. PayPal Holdings Incorporated operates a technology platform that enables digital payments on behalf of merchants and customers worldwide. It operates a two-sided network at scale that connects merchants and customers, that enables its customers to connect, transact, and send and receive payments through online and in person, as well as transfer and withdraw funds using various funding sources such as bank accounts, PayPal, or Venmo account balance. PayPal and Venmo branded credit products comprising its installment products. Oh, so I guess they own Venmo, credit and debit cards, and cryptocurrencies, as well as other stored value products, including gift cards and eligible rewards. The company provides payment solutions under the PayPal, Credit, Venmo, Zoom, Zettle, Hyperwallet, Honey, and Patty. The company was founded in 1998, headquarters in San Jose, California. I didn't know they owned Venmo, so you know what? I'm liking this a little bit more. I bet it has a nice cover call. Let's look at the cover call. PYPL. It's going to be $86 today when it opens. Okay, calls and puts, all. So I'm gonna go out 30 days to December 6th. No, that's not right. To November 29th, 31 days. So we buy the shares here at $85.95. PYPL. So you're gonna spend $8,595. That's your investment, guys. This is how the cover call works, okay? Buy 100 shares here at the market. Tomorrow we're going to sell the cover call. We go just above the strike price. We go, let's say the 90, 228, 89, 88, 85, 86, 87, 88. What I would do, I would sell the 88. I'd like the 88. 88 CC, okay? You know what, though? It's only fair to do the trade at 83 because it was 83 at the close, 83.59 at the close, and the options are of the close, not after hours. So I'm going to use the 83.59 price, 83.59. That's if you bought it today. If you buy it tomorrow, it'll be a little more. You'll get a little more premium. So you're going to spend $8,359 to buy 100 shares. And then the 88, that's 87, 83, 84, 85, 86, 87. Let's do the 80, let's do 4 points up, 87. Cover call. And then it's going to pay $3.35. That's $3.35 per share. $335 per 100 shares. So if you write the call above the money, it's going to pay around $335, $400. Let's do the math. 3.35. That's the premium. That's 1 month out. 4 points up. Divided by 83.58. 83.58. We need charging battery. Hang on, guys. Okay. We're doing the PayPal cover call, and the math is such. We're getting $3.35 divided by our purchase price of $83.59 equals 4% return. So they have a great 4% return cover call, and that means 4% return a month, or $335, give or take. That's 40% per year. If you do 10 cover calls, you can do 10 and take 2 months break. And that's actually a great return. And probably the stock will be coming back, maybe over 100. So I like it. I'm going to give it the check mark. They probably had earnings or some good news after hours. Check with your broker about that. Yeah, green light on PayPal. Questions? Kenneth, I see you. Let me see if Kenneth has questions. You want to come? You want to come over here, Kenneth? Can you explain what's happening with PayPal? Yeah, so I just did sort of. I gave it the green light. You know what? Call your broker. They can pull up all the news on PayPal. They probably had some earnings. Do you think about IONQ and what's been happening the last couple weeks? Kareem Gorami. Kareem, what do you think about IONQ? I don't want to pull up any news. That just takes so much time. You can do that with yourself. But let me look at the stock for you. I'd like to look at the IONQ. I like to look at the technicals, right? Volume, share price, movement. Okay, so it's $17 a share, kind of low. Not great. I like robust share prices. 100, 200. Pepsi is 169. McDonald's is 300. Tesla's 260. Apple's 230. So now we're at $17. Volume is 31 million, so it has great volume. What is this? Technology, hardware. They're making me do a puzzle, guys. They think I'm an AI robot. Dude, they're testing my patience right here. All right, back with you guys. IONQ, technology, hardware, storage, peripherals. IONQ Incorporated engages in development of general-purpose quantum computing. Whoa. Systems in the United States. It sells access to quantum computers. What? Of various qubit capacities. Qubits. The company accesses its quantum computers through cloud platforms such as Amazon Web Services, Amazon Bracket, Microsoft Azure, Quantum, and Google's Cloud Marketplace. Dude, they're selling quantum computers. Isn't that dangerous? Isn't that how we got the Mandela effect? You guys do know about these conspiracy theories? Mandela effect. Look at you guys. You guys think about. What's the Mandela effect? You guys know about the Mandela effect? In the Bible, it said, the lion shall lay with the lamb. Now it says, the wolf shall lay with the lamb. Go figure, dude. Could be a Mandela effect. They could be playing with these quantum computers, messing up reality, bro. Look into it. Look into Mandela effect. Scary stuff. But anyways, this one, let me look at the 5-year chart. So it maintained, okay, so it's a new issue. It just came out in 2021. Only has 3 years. This one has a lot of hype, a lot of volume. Let me see. Probably no PE, right? No PE, right? PE dash. They're losing money. Market cap $4 billion, so it's kind of tiny. No dividend, no stock splits. It's a really hot. You know what? I've been working on my criteria for stock selection, and I have 11 different criteria. And I'm going to make it 12 because I'm going to add, what is the product? Is the product relevant? How relevant is the product? If you're doing quantum computers and, AI technology and stuff that's relevant, EV vehicles, they're going to get the check mark. If you're selling condoms, something that's just really basic, that, it's not going to be hot, then it's not going to get the check mark, So in this case, this we get the check mark for relevancy because they're quantum computers. So I bet this one has a crazy cover call. Let's just look at it, okay? Cover call. Hang on with me, guys. IONQ. Ion, Oscar, Nancy, Quasar. Here we go. So I buy the shares here at $1,765. Okay, 100 shares. We go out to December 6th, 31, no, November 29th, 31 days. IONQ, 1765. Yeah, guys, there's like 6,000 stocks or something. So obviously, there's all these little diamonds in the rough. This one's risky though because it doesn't have that tried and true, but it looks like it's pretty hot. Okay. Okay, so the cover call is such. If we sell the 196, ooh, it's paying. It's paying. So I would sell the 19. So you buy here for $1,765, which is $1,765 for 100 shares. Okay, IONQ. Right, the cover call sell 1 CC 19 strike for 1 month out for November 29th. It's going to pay 196 by 215. 196, $1.96, or $196, or just $200. Because with this kind of volume, right? Write this down. With 31 million volume, right? And you have a spread on the option of 196 by 215. What that means is that there's a lot of traders and investors in this stock that are trading. Just put a limit order of like $2. And someone will take that option. I'm going to do this trade by $2 income because I know I can get that. Limit order, write down limit order, right? Let's do the math, okay? 2.00 premium, which is $200 income on a $1,700 investment, divided by 1765 equals, 11.33% return per month. That's 111% return per year. Whoa, you can double your money in a year doing cover calls on this. The downside is if the stock slides, you'll start losing share growth. But let's say it goes down 30%, right? You get 111. You can still do the cover calls. You get 111% on the cover calls. So you'll make only 81% return. Oh, so terrible. So this is like a diamond in the rough. I like this. I'm going to look into this one. Thank you, sir. Don't just jump on it, but look into it. IONQ, quantum computers. I might want to buy a quantum computer. I might want to just play with reality. Quantum computing stock has been going crazy the last couple of weeks. Want to see your thoughts, Kareem. Well, I think I gave you my thoughts, bro. I'm kind of surprised. Though it's a new issue, 3 years, no profits, very high, has a lot of volume, which is very important, volume. It's a relevant field, and it has a great cover call. So, I mean, not for novices, but check it out, 100% return in 1 year. I mean, I teach you guys, if you guys do one-on-one Zooms with me, which is, you want to hire me for that, I teach you how to do these, what's called a cash cow position, whereas you're going to get a stock, hopefully a good stock, and you're going to get monthly cover calls. And after so many months of cover calls, you're going to hit 100% return. At that point, you've gotten all your money back for the investment, and you're still getting cover call money. I call it a cash cow because if the stock drops to zero, you still made money. And in this stock, hits your 100% return in 1 year. So it's kind of like better than good. Look into it. Long runner tomorrow. LONQ, runner tomorrow. I don't know if it's going to run tomorrow. Thank you, man. Very insightful. Kareem, man, got your back, dude. Look at the stocks for you. Look at the cover call. Don't be afraid to write the cover call because you're getting that income. They say a bird in the hand is worth two in the bush. So we don't know if the stock's going to go up, but if we get that cover call money, $200 a month, that's your business. You invest $1,700, you get $200 a month. That's your business. 10 cover calls, that's $2,000 a month for a $17,000 investment. I mean, now the share price is probably gonna move like crazy, so you gotta have steel teeth, but keep it going for a year, and as long as the stock doesn't completely get destroyed, you're gonna have a 100% return. That's how I see it. You want to throw me a sub? It's only $5 a month. Ask me questions, go in your DMs. If you want to throw me some cranes, I won't say no. Give me some stars, whatever. Thank you guys for the likes. Appreciate you. I'm going to take some more calls. We'll probably wrap up in about, 10, 20 minutes. I'll do a few more stocks if you want. If I miss your question, so sorry. Just put it in again. I can't only wrap back so far. I will follow everybody back after the live. I'll follow you back. Going for that, been telling all last week, been hitting huge. Thank you, man. Very insightful. You're welcome. You're welcome, Korea. Call profits have been nuts. Yeah, they have. And, a lot of people don't do cover calls or sell calls, but if you think about the income, if you do consistently every month, you can probably do pretty good, like as far as a financial plan. Big contract with Air Force Research Lab recently. Oh, really? And that's part of the problem, actually, Kareem, with stocks like this. Most people are not going to be buying quantum computers, so they have to rely on government contracts. Well, the problem with government contracts, they come and go. So it's better to be in a stock like Starbucks or Pepsi because everybody can buy that product. Not that many people can buy quantum computers. So it's a niche product. It's kind of like selling Lamborghinis, It's a niche product. So that actually is a bad thing. But thank you for that, they get government contracts. If the government... Okay, so here's another thing. Let's say this company is successful and these quantum computers are working, right? The government will probably buy them out and control them. That might happen. So they may pay 20, 30, 40, 50 bucks, $100 for this company. And then the share price will jump to 100. And you guys that have long calls, that 1, 2, 3 years out, will make good money. Like if you thought that this was a good company that made a good product, I don't know if the product's good. I don't know. But like if you go to options, right? Go back to options. How far does options go out? January 2027. Let's see. If one to buy call, what's that? 2 years out? Just over 2 years out. Let's see. The 20 call is charged. Oh, only $7. What? And then the 30 is charging $5. So you can buy that 20 call for $7. So here's an idea. Okay, people that want to do a Hail Mary pass on this stock, right? IONQ. Go out to January 2027. That's what I would do. And you can buy the 20 call for $735. $735 by $790. Decent. So you have a $730 investment, right? $730. And now this option may shoot up if the stock goes up, and someone buys out the company's option will go up. But what you can do, when you have this long call, you can sell the higher call every month, which is considered a poor man's cover call position. Look at November 29th, that's 1 month out. If you own the 20, let's say you sell the 25, 5 points above, 62 cents. 62 cents. Let's say you sell the 23 is 92 cents. Let's just say you get 80 cents a month, right? Income. So your investment is $735, and you get 80 cents back. That's what you're doing. You're buying a call, 20, and you're selling the higher call, 23, for 80 cents. You're buying a call, 20, which is for 2 years out, January 2027. It's called a poor man's covered call. And you're writing monthly, getting money back. You're selling the call, getting money back every month. And in this case, we're going to get 80 cents return. 0.8 times 12. We're getting 9.6 points a year. So in 1 year, you're going to get back all the money you spent on that cover call. The second year, you're going to double your income on that call. And then you still have upside in this stock if it goes up. So, yeah, that's another trade you can do. It's called poor man's cover call. Look into it. If you did want to just spend $700 and go 2 years out and see if this stock's going to do something, that would be, you know, a risky trade. But you get time for the stock to go up. And if those, let's say the stock goes to 50, then this 20 option will be 30 points. You'll get like quadruple, quintuple your investment. Okay, enough of that. Questions. Luca, what stocks are you looking at to sell puts on? Luca, appreciate you. Great question. Thank you for the coins, Millennial. Appreciate you. Millennial Habits 09. One's only a crane or two. I appreciate you. And then I get the question by Luca. What stocks are you looking to sell puts on? Okay, so when you sell puts, it's kind of like a cover call. It's still a long position. So instead of buying the shares and selling the call, but getting money every month, you're just selling the put. And since you're selling the put, you're short the put, which means you're not short, you're really long. And you're getting money on the put. Like if you were to do, I sold puts on Tesla when it dipped, when it was down 4 points, when it was down to 213, down 4 points. I sold puts on Tesla. I got like $1,000. And for example, this is what I'll do. Tesla, but now it's up, so I wouldn't. I would sell puts when the stock dips. So let's do what stock dip? TSM, Semi Microcomputer, the hell is that company? I always mess this up. Taiwan Semiconductor, TSM. This one went down. Okay. This is the one you want to sell puts on. Or McDonald's, but not really McDonald's because it won't pay enough. Okay, sell puts on TSM because what? Because it dipped 195.70 down 876. So what you would sell a naked put maybe like the 180. Let's see. I'll tell you which one to sell. There's about 1,000 options on all these stocks. I'm giving you the exact options to make you monthly money. Okay. So you go to November 29th, 31 days out, and you'll sell a naked put, right? Or if you don't have the skills, you'll have to be a covered put. But whether it's covered put or naked put, I'm going to do the same math. The stock is 194.68. So I would look around the 180. Let's see. No, that doesn't pay enough. 190. 640. Yes. 190, 195. Okay. So what I would do, I would sell the 190. So the stock is 194.68. Say 195, give or take. I would sell the 190. So you have a buffer. It's like a 5-point buffer. It means that you don't have to take the stock unless it goes below 190, in which case you'll take the stock. But you'll get a premium of 640 by 655. Very tight. Nice tight premium. 640 for naked put. Strike 190. So you're agreeing to sell the stock. Should it dip below 190 at the expiration? Even if it dips below but comes back, you won't be assigned the shares. But if it dips below, it stays there, you'll be assigned the shares. And let's do the math. 640, 6.4, divided by 190 share price, because that's the price we'll take the shares. 3.36%. Not a, I mean, that's actually a great return, but compared to these other stocks you give me today, man, it's just real plain. But we're going to get a 3.36% return on the naked put. 5-point buffer per month, or $640 per month. Your investment's about $19,000 because you're agreeing to sell the take your shares at $190 on that naked put. $19,000 investment, $640 income per month, 3.3% return, and it's 33% return a year, which is great. So this will take 3 years to get to cash cow, you see, at 33% per month, 3.3% per month, 33% per year. 3 years, you get 100%. So it's not like that Icon company, Quantum Computers, which is like 111% per year. This was more legit, more average. But like, unlike the other company, this one has a PE. They have profits. They have a 10-year chart. So it's more stable. You're exchanging less income with Taiwan Semiconductor for more safety compared to Icon Computers. Compared to, what's the symbol? IONQ. So that's what I would do. I would sell a put on a great company that dipped, and you get more premium when the stock is down, the put's paying a little more. And then what happens usually is the stock will just kind of creep up. It won't go below 190. And you'll just be making this money every month. There's 640 in this case, 3.3%. That's what I do. Make sense? And when stock swings up, ideally, you can sell the call. When stock dips, you sell the put. Questions? Thank you guys for the follows. We're about to wrap up. What stocks are you looking at? Luca, hope that answered your question. Appreciate you. Thank you, Millennial, for the coins. Kareem. You guys, if you guys want to throw me a sub, it's only $5 a month. You can ask me questions in my DMs. I answer all. Just one question at a time, please. Appreciate you. Don't blow it up. Don't blow it up. You know what I mean. Yoon going for that then last week. You guys, I appreciate you. Looks like we had a nice live tonight. Want to send me a message? I'll entertain that. I'll probably back sometime this week, or if not, next Monday. And if we can trade right and control our account and maybe make some money on these calls and puts, we can pay all our bills and retire in the stock market. Thank you guys. Appreciate you.